Hey, hello, welcome to today's video. I'm Chris here with ELLIOTT WAVE Cafe. Welcome. It is the 14th of January. Let's take a look. I want to present you, I've gotten a request from one of our YouTube subscribers here to take a look at the S&P from a longer term perspective. So I want to do that in a little while, but I just want to kind of cover the markets pretty quickly. My fears towards a market sell-off, they continue to grow, and today was another little bit of evidence that could come to fruition. We sold off quite aggressively, almost 2% at some point in the NASDAQ. And I mean, the small caps were doing better, but the S&P really not that much. They tried to recover, towards the end of the day. I don't know. We've had quite a few failures from the banking sectors. I know we're getting into the earnings seasons. The volume on the sell-off, it's pretty aggressive if you ask me. I mean, you can see in here for the past couple of days, look at the volume bars, a little bit above average too. So, these are signs that I think the Wall Street, it's playing defensive. We don't have a close yet below the 50-day moving average. I think once that starts to happen, we could accelerate. So you look at the mags, and they were all heavily, with the exception of Google and maybe Palantir a little bit. The rest of them were pretty heavily down. So that kind of dragged the market. So silver still does great. It's trading at about 92. I think it was as high as 93, 93.7 here on the futures. It's a bit extended, so we'll see what happens there. I think where obviously the closer you get to 100, the more I think the selling will probably accelerate. Bitcoin is doing pretty good, but still it's got more work to do in my view. So we'll see what happens tomorrow. A lot of things here geopolitically, that could kind of shake the markets. We're waiting for the tariff decision from the Supreme Court. It's just, the tape could get heavy with news going forward. So the markets are probably gonna, the VIX were probably going to elevate in here by the way I'm seeing things kind of develop, and that should put more pressure on equities. The dollar did not accelerate today, but it is above the key moving averages in here, and the moment we crack above 100 in here, it could get some more traction. So definitely we're going to keep an eye on that. So let's take a look at the S&P. And since my data in the motive wave, it doesn't go that far back. I think it stopped somewhere. I mean, I'm sure there is a way for me to pull more. I gotta look into it, but I'm looking at this as a wave one of a super cycle. Wave two, super cycle down in 2008 low. After the great financial crisis, which means that whatever we're in right now, in my humble opinion, it is a wave three super cycle, with the AI race, with all the, the hype that we're living in as a society, what have you. Listen, I don't have a crystal ball. Nobody does. I don't come here and pretend that I know, what things are going to look like in the future. I'm not giving you any guarantees. I'm not, selling thousands of dollars subscriptions to, to kind of convince you or to try to gain more, more stuff like that. I mean, if I look at, the guys from ELLIOTT WAVE International, I mean, this was a chart that was posted, by Proctor. This was in 2022, I think, at the Money Show or something, forecasting the 2022, 2024 and beyond. And you can see, I mean, how arrogant do you have to be to present this type of scenarios to your viewers or to your readers? These are all just kind of ego exercises that I don't think serve anybody any good. So you can, go ahead and throw this in the trash. I mean, the Dow Jones is trading at 50,000, right? So come on. So that's why if I'm looking at this, I can tell you, yeah, we're going to go to 50,000 in the S&P 500. We're trading 7,000. Markets are usually going higher more than they're going lower, as you can see. And I have another chart in here, that starts before the Great Depression. You have the Great Depression here in the 30s. And then you can look at the size of the corrections. There was an 85% during the Great Depression. Do we expect something like that? They're not going to repeat that mistake. I finished reading the book 1929 from Andrew Ross Sorkin. Great book. I mean, just kind of gives you the perspective on kind of what happened there and how the political side, the Fed, what they were doing and kind of how it got out of control. They're not going to let it happen again. I don't think we're at the danger of something like that ever happening again. Mind you, you could have obviously deep sell-offs. You've had 37% here in the 70s, 50%. Then the two big ones, the latest biggest ones that we've had, right? The dot-com bubble, where we dropped 50%, 58% in a great financial crisis, and then we've had your COVID crash was about 35%. Then the latest one in 22 of about 27%. So if you look at my chart, I have this area back here kind of labeled as a wave 2 super cycle. I'm looking at this a wave 1 from the lows 2, 3, 4, and 5. That completes the wave 1 super cycle. You go down, you get a big flat formation here, I think, because was a new high. So you have a wave 2, right there. That's the guy, and then you're beginning the next higher cycle, and we're somewhere, in a wave. I have it as a wave 1, 2, 1, 2. If I'm not mistaken, let me go back. Yeah, so 1, 2, 3, 4, 5 for the wave 1 cycle. Wave 2, another 1, another 2, and then we keep going. If you look here, it is, that's your wave 1. And listen, these labels cycle, super cycle, you can do something else if that, if you like that. I'm not that crazy about precise Elliott wave labeling to say that this is, to look at the number of years and call that a super cycle, a cycle. How many years do we need to have into this one or to that one? Again, I think that the market is much smarter than me, and this is probably not going to pan out the way it is. So I know that much. This accuracy, into trying to read the future. I mean, it's a futile exercise. I mean, it's nice to put this stuff out there, but we're just kind of playing with colors and numbers. You got to watch your risk, and I can tell you that much. I'm not gonna base my retirement account decisions on labeling a wave 5 and getting out of the market, or I'm constantly gonna average and kind of let the market develop. I use Elliott wave for more shorter term stuff. Longer term is extremely difficult. So we'll see where this goes. So anyway, if there's a wave 2 cycle low and you have a nice impulse here, and we sold off in earlier last year in this kind of sharp wave 2, then I'm looking, as I've said, into some of my updates, as a wave 1 up, followed by a wave 2 correction. So this is kind of what I'm looking for right at the moment, because this looks kind of tight and that it's about to roll over. Again, we need to get confirmation for that, and if it does, then we'll look for a wave 2 pullback. That's all I'm looking for. Clearly, if you're, and I don't even want to say this, I mean, if you want to exercise this, if you drop below this whatever it was, this $5,000 low, Obviously that's not going to be a wave too low, and you know, maybe it's probably going to be at a different degree, right? You can maybe put this wave one blue back there, and then wait for a larger wave two. Markets go higher over time. The Fed is there. The companies continue to innovate. There's all kind of fears, from that to wars to I don't know, viruses to what have you, that can throw a society upside down for a little while. But usually things have a way of kind of correcting themselves, and hopefully as humanity we continue to get better and evolve and innovate and not be scared all the time, right? So the market's been showing good returns for the past 100 years here, and it's probably going to continue to do the same. It's the kind of the best way to grow your wealth. It is to be in the equities. So that's my take. So I'm expecting corrections, sure, and they I do hedge in my accounts that I trade actively, and I want to protect, but I don't want to be a gloom and doom here and just tell you everything goes to shit, or for that matter to be so far up the bullish look that nothing stops the strain and everything continues beautifully all the time. We do have issues along the way. The markets are not that easy, right? They're going to shake people out. So long story short, I am looking for a correction here. I'm not looking for anything crazy. We'll see if it develops like that or not. But that's my view, that this was probably a wave two into the 61.8. And now you're beginning the count again, and you're going with the 1-2, and then we'll probably going to continue higher. I mean, this wave two could last the whole 2026, up and down. It might be corrective. Listen, we've had pretty good years for the past 2-3 years. Could this continue at the same rate? It's hard to sure. Let's say that it does, and that's fine. But the market, from what's telling us right now, it's pretty broken. So we'll see how long this correction lasts. I don't know. Nobody does. But it does feel that something has changed and has shifted a little bit in the way stocks are acting. And you can see the mega caps, and you can see kind of things pulling into different directions. So there could be sectors that are going to do great. There could be sectors that are going to be in the shitter. But you ask anybody, people that have been trading for a long time, and they all tell you since October. I mean, everybody had a great year last year until everybody screwed it up in the last 3 months, from October to December. I think 70-80% of the people I've heard, they screwed up their returns in the past couple of months of the year, and that's when the market broke, and it's still broken, and it's still struggling for direction. So this is the hard part. I will increase my short bets. Today was another indication that this market could be on its way down and correcting. And if I get, if we break below those 50-day moving averages, I will press my shorts. So, once again, I mean, look at this and do with this information, what you may, and use it maybe as a guide, if anything. Again, I'm going back to this, and I have it. I'm looking at it almost every day, and I kind of see that the market moves from the lower left to the upper right, and it's got different size corrections along the way. They seem to be getting smaller, so maybe there's going to be a big one coming. We'll see. But this is the trajectory of the market. It has been for a long time. So I like to look at this. I don't like to come out here and just show you crazy stuff like this. It's fun. I'm sure people maybe love seeing like this. We all love stories and stuff, but I don't know. I think the older I get, the less bullshit I can take from charts and from convictions, I guess, from anything, from what happens tomorrow to what happens in the market to placing bets on certain things, because people are wrong more often than they're right. So that's what it is. All right, thanks for watching. I don't know if I make any sense tonight, but hopefully you can get a few things out of it. So anyhow, I will talk to you tomorrow. Bye bye.